We are looking live at Datavault AI, ticker DVLT, which is currently trading on the NASDAQ at $1.76, seeing a dip of about 4% on the day. The stock is down around 7.5 cents in this morning session, with very heavy volume already clocking in at over 12.5 million shares traded. This comes after a previous close of $1.84, and the stock is oscillating in a tight range between a low of $1.68 and a high of $1.84 so far today. Now, for anyone just glancing at that 4% drop, it might seem like just another day of volatility for a nanocap stock. But the expectation that this is random noise could not be further from the truth. The reality is that this stock is an absolute pressure cooker of conflicting narratives, and the price action you are seeing is the direct result of a public war between a major short seller and a company firing back with massive, potentially transformative news. Just last week, on October 31st, the well-known short-selling firm Wolfpack Research announced it had taken a short position in Datavault AI, and the stock predictably took a sharp hit. But what's fascinating is what happened next. The company didn't stay silent. It immediately issued a formal, aggressive response calling the report malicious and forcefully affirming the strength of its intellectual property, its leadership, and its strategic direction. This is not the typical behavior of a company rolling over. This is a company fighting back, and the stock is now caught in the crossfire. The common belief about Datavault AI is that it's a highly speculative, retail-driven play that has recently emerged from the shell of its former self, WISA Technologies. Many see the face-melting 700%+ rally over the past month and assume it's just a momentum trade, a low-float stock being pushed around by social media hype. And to be fair, there are elements of that. The company is absolutely leaning into its retail audience. But to dismiss it as just that is to miss the far more complex and high-stakes battle happening underneath. The deeper take is that Datavault AI is in the midst of a profound, all-or-nothing strategic pivot. It is attempting to transform itself from a struggling audio tech company into a Web 3.0 infrastructure provider focused on AI, data tokenization, and digital assets. And while it's fighting a public relations war with short sellers, it is simultaneously announcing partnerships that, on paper, are valued in the billions. This creates an extraordinary tension. Is this a house of cards, as Wolfpack suggests, or is this a ground floor opportunity in a company that is finally commercializing its technology, as management claims? The truth is likely somewhere in the messy middle, and the recent news flow has been absolutely relentless. Let's look at the recent volatility. This is not a stock for the faint of heart. The daily volume has been astronomical, frequently clearing 90 million or even 170 million shares. Today's 12 million shares in the first hour of trading just continues that trend. This is what a battleground stock looks like. You have a huge number of shares changing hands, indicating that for every seller or short seller, there is a buyer willing to take that position. This intense volume is critical to understanding the short-selling dynamic. While the stock has seen significant short interest, the days to cover ratio is actually very low, often around 1. This means that due to the massive liquidity, shorts are not trapped in the way we saw with other so-called squeeze plays. They can get in and out relatively easily. The battle here is not about a mechanical squeeze. It's a war of conviction. This volatility was supercharged on October 6th when the company announced it was updating its 2026 revenue guidance, stating it expected to exceed its previous target of $40 to $50 million. The stock rocketed 49% on that news. But then, just yesterday, November 3rd, the company announced it was mutually terminating a previously disclosed agreement to acquire A&M 91 Media Innovations. This adds another layer of uncertainty. Was this a good move, shedding a deal that was no longer a good fit, or was it a sign of a deal falling apart, as the short sellers might suggest? This brings us to the core of the conflict, the short seller awareness that every investor in this name must have. Wolfpack Research is not a random name. They are a known entity. Their report, as detailed in press summaries, allegedly focuses on misleading claims and questionable leadership, even pointing to past SEC charges against the company's CEO, Nathaniel Bradley. This is the bare thesis in a nutshell, that the company is overpromising, that its technology is not what it seems, and that its leadership has a checkered past. The company's counterargument is just as forceful. It's defending its patent portfolio, which it claims is foundational to its new direction, and it is standing by its management team. This is a classic he said, she said scenario, and the stock's price is the scoreboard. What's your take on the Wolfpack report? Is it a legitimate warning, or are they trying to suppress a stock before big news hits? For investors trying to navigate this, the key is to understand what to watch. You can find the official short interest data on the NASDAQ website, but remember that data is published twice a month and is already out of date. It's a historical snapshot. What's more actionable is to watch the real-time borrow fee rate from your broker if they provide it. This fee is what it costs to borrow shares to short. If you see that rate spike, it means the supply of shares available to short is drying up, which can be a precursor to a sharp upward move. But given the high volume, the more important signal is the news flow. This stock is trading almost entirely on press releases. So what does Datavault AI actually claim to do? The company you see today, as I mentioned, is the new form of WISA Technologies. It has fundamentally restructured into two divisions. The first is its legacy acoustic science division, which holds the patents for WISA, a technology for wireless HD audio, as well as ADIO, a data over sound platform. The second, and the entire focus of the new story, is its data science division. This division is built around what it calls the Information Data Exchange, or IDE. The goal here is to use AI and high-performance computer to help companies value, manage, and, most importantly, monetize their data. This includes creating digital twins, licensing name, image, and likeness rights for athletes, and the big one, the tokenization of real-world assets. They are positioning themselves as a Web 3.0 infrastructure company, a platform that allows data to be turned into a tradable asset, all while ensuring privacy and compliance. They've also touted partnerships with major players, including IBM Watson X. This is the grand vision they are selling. But here is where expectation meets a very harsh reality, the company's financials. You must look at the balance sheet. In its last quarterly report for the period ending in June, the company had just $662,000 in cash. That is an exceptionally low number for a publicly traded company with such grand ambitions. While revenue has been growing rapidly, up 148% year over year, the company is burning through cash at an alarming rate. Its trailing 12-month revenue is around $4.5 million, but its net loss over that same period is a staggering $68 million. The operating margin is negative 754%. This is a company that desperately needs to fund its operations, and it needs to do it fast. This financial reality explains the recent flurry of news. The company is in a race against time to prove its new model can generate real income before its cash position forces it into massive dilutive share offerings, which would hurt current shareholders. This is also reflected in the ownership structure. Institutional ownership is almost non-existent, at around 4 to 5%. This is not a stock that Wall Street funds have bought into. Insider ownership, however, is quite high, around 28 or more %. This is a story being driven by its own management and a massive newly arrived at the party retail investor base. This brings us to the future outlook, which is where this story becomes either a fantasy or a potential multi-bagger. First, you have the company's direct appeal to its retail base. Datavault has announced a one-time distribution of a Dream Bowl 2026 meme coin to all DVLT and Silex shareholders of record as of November 14, 2025. This is one of the most direct and unusual appeals to the meme stock crowd I have ever seen. It's a loyalty reward, a digital collectible tied to an esports event, and a clear signal that management understands exactly who is buying its stock right now. Comment below if you are a shareholder of record who is eligible for this new Dream Bowl meme coin. But while the meme coin is a fascinating sideshow, the main event is the Silex deal. Just hours ago, news broke that Silex Holding Company is licensing Datavault's platform to tokenize genomic, DNA, and other medical data. The headline attached to this deal is almost unbelievable. Milestones up to $2.55 billion. This is the blue sky scenario. This is the narrative that is fighting back against the Wolfpack short report. The bulls are not looking at the $600,000 in cash. They are looking at the $2.5 billion potential from this one deal. Add to that the company's own guidance of exceeding $50 million in 2026 revenue, and you have the makings of an explosive story. So we are left with this. The expectation is that DVLT is just another volatile, speculative nanocap stock. The reality is that it is a company in a high-stakes, public-facing pivot fighting a war on two fronts. On one front, it's battling a well-known short seller over its very legitimacy. On the other, it's announcing potentially company-making billion-dollar-plus deals in the futuristic space of data tokenization, all while running on a very thin cash balance. The 4% drop today is not just noise. It's the real-time, tick-by-tick result of this massive conflict. The future of Datavault AI will not be decided by social media chatter or by short reports. It will be decided by one thing and one thing only: execution. Can this management team, the one Wolfpack is questioning, turn these eye-popping press releases and revenue guidance into actual cold hard cash and profit? Can they convert the Silex deal into real tangible income before the cash on hand runs out? That is the only question that matters now.